Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going over what you can expect if you have a property manager and rental properties. So I just got an envelope in the mail. It is from my property management team, and I'm going to be going over what exactly I get inside my envelopes every single month. And if we want to share information back and forth over what you get inside your envelopes in comparison for your property manager and such, we could definitely do that. But in today's video, we're going to be going over, I finally got all my properties filled, so this will hopefully be a nice size check kind of with the deposits and the rentals and everything that are included. So we're going to be going over what you should expect from your property management team. So if you are brand new to the channel, hit that subscribe button below. If you do enjoy the video, find it helpful, hit the thumbs up. And of course, if you have any comments, questions, want to drop a comment below over if you have property managers yourself, let me know in the comment section. I always appreciate all your guys' feedback as well as the new subscribers and all the thumbs up. So here, I just got the envelope back from my property manager, went out. I just got back from a business trip. I was installing some network gear and I got this in the mail. Now, it's addressed to my LLC, my limited liability company. I run my real estate business as a limited liability company. I talked about this in an article going over sole proprietorship and LLC, different entities, why you would pick one over the other. I wanted to protect and limit the liability from the business assets to my own personal assets. So I created a limited liability company, and I have my real estate investment properties within that LLC. Now, all of the checks that I get delivered to me are all specifically sent to the LLC here. I have a check. Yeah, it's folded into the statement here. So I got the check here, and I can go ahead and share. This will be the first check here for the amount of $2,310.54. So I have 3 rentals. I got 3 different payments to the owner, being the business entity. And then here I got all my statements. So all here are going to be your owner statements. That's what's included here. I get a check for my 3 rentals written out to the business entity, the LLC. And then I have different statements here, and they are all separated by the address. So depending on what your rental address is, you're going to get a statement that's going to show you the date of whatever took place, the payee or the payer, the type of whatever, it was a check, it was a receipt done, and the reference number that they have within their system. So if you ever want to go and reference a specific incident saying, hey, I saw that you guys charged me for a work order here. Can you tell me a little bit more about what took place? What was done before, what was done after. It also gives you a description here. So on here, I can see that gas and plumbing. So they paid for gas and plumbing, the water bill, garbage and recycling. And that is something that when I listed my properties, I talked about the property manager and said, hey, I'm brand new being here in the real estate investment business. I want to know what are the standard practices of, what utilities, what bills should the real estate investor be paying, what utilities and bills should the tenant be paying. And the property manager said, hey, look, you can go out there and you can charge a little bit less and have all the utilities, trash, water, sewer, all that put on the tenant for them to do, or you could increase your rental, the rent that you charge, but we would recommend that you pay for water, sewer, and trash. That way you always have water flowing through your rentals. That way their pipes aren't freezing up. It's not like still within the pipes and it's always active and not going to be freezing. And sewer there is included there in the water, sewer, and then you're also paying for trash. That way all of your tenants have trash services done every other week or every week here, and they're going there, they're collecting their trash, they're collecting their recycling, and that way you're not having all this trash and collections building up at your rentals where they don't want to pay for the trash themselves. So they have all this trash that they just throw into your yard, into the backyard, and it starts to build up and collect. So I said that's a great idea. I went ahead and bumped my rental charge by about $50 to $100. I went out there, got the average. I talked to them, what's the average water? What's the average water, trash? Yeah, water, sewer, and trash. And then increased it, I believe, right around $50 to $100. And that was the rent that I had requested. Now, so now that the tenant is in place, the electricity, the gas, and maybe some other items there, that's all on the tenant's end. I am paying water, sewer, and trash. So looks like we have the rental income, which is getting charged. There's also a pet in one of the units. I put laminate flooring down. I didn't do any carpet in any of the units. That way, they kills it before they put down any sort of laminate down. Then they put some vinyl composite tile down, which is waterproof, scratch proof. It's not carpet, so if there's pets in there, they're not going to be destroying the carpet. If they do have accidents, it's not going to be destroying the carpet floor where you're going to get a bunch of stains. You're going to have to replace the carpet every single cycle anyways. If they go in there, the vinyl composite tile is supposed to be extremely durable and resistant. So I'm able to charge a little bit more for rental income plus pet rent income. So I have that kind of going there. And then it also shows commissions paid and maintenance labor. So here we saw that they have a note here. So the bathroom door would not close on one of the units. They went through and painted some of the units, and maybe there was a little issue there where they added and replaced a door, and now the replaced door would not close all the way. So they went out there, they pulled the door hinge or the door off, they shaved it down a little bit, painted it, and rehung it back up. So now they were able to fix that issue. And then behind the owner statement here, they have all of your work orders. So they gave me the work order there for the bathroom door being removed and how much they charged me, $75 for that work order. And they have all the utilities here. So Avista, that is, what is Avista? Is that gas? I believe that's the gas company. So they charge me, they pay for the utilities themselves. The property manager puts the utilities in their name and pays it. They can either go either way, where they're paying it and they're kind of maintaining it, they're kind of tracking it, and they pay it, and then they give me all the receipts. That way I'm able to kind of mark it down how much I'm paying. I still am able to write this stuff off as utilities, so they kind of maintain and pay it off as themselves, and then they kind of invoice it here, and then that's kind of included there within the bill of the rent income that's deducted there, and then I'm able to deduct it out of my own deductions as well. So waste management, so there's the trash and such, and then I have another statement for the other property. So every single time I have a statement followed by the receipts and the work orders that were for that specific unit. So then we have the second unit here where we have the water, any sort of work orders that took place, and then in the very back we have the third statement. So you get all of the statements for your units in order, whatever order they're in, along with the good description of why you collected specific income. It was rent income, pet income. You have your expenses. What exactly were those expenses? Gas, electricity, water, and we had like a work order here. What happened during the work order? They give you a statement here, statement of work. So you're able to, write that off as well. So that is what I get here as far as from my property manager. Every single month, they send me these statements. That includes my statement for the specific building, along with they pay for my water, sewer, and trash, and then they pay if they have any work orders where the tenant calls them and they had to do some sort of a work order. That may get charged on the tenant depending on if it's a tenant issue or not. I know here one of the other things here, the tenant had brought in like a washer and dryer, but their plug was set reversed, and they called the property management. The property manager, they billed the tenant because they called and they had an issue with their own washer or dryer plugs, their device. The property manager resolved their issue for them by fixing their outlet, but because it was on their end and not an issue here with the building, instead of them charging me, they charged the tenant that specific fee, and that wasn't here on the business sheet. It reports it to me saying this, the tenant called, they had an issue, this is what took place. We didn't bill you, we billed the tenant. And that was something there that was included. So that is basically it. As far as what I received from my property management team, I get a nice envelope every single month with my owner statements. I get my receipts for the utilities that I paid for, and they kind of charge the business. And then I get my rental check here that's going to be directly deposited here towards the business accounts in order to pay for the mortgages, pay for the utilities here, and also kind of collect a little bit of a buffer. So it's also, I'm setting aside capital every single month for any maintenance, any sort of the taxes, and I have like 5 or 6 different things that I set cash aside. At the very end of it, I may get a check for $2,600 or $2,500, but of that, I'm only able to keep, I have a mortgage now of $500 on one of the properties. The duplex is completely paid off right now, and I wanted to have it filled up first, collecting rental income for a little bit before I go to the bank and said, hey, I got 3 months of rental income. I have, it's stable. I have these leases in place for X amount of time. I want to refinance this property. They can look that my business is generating income. It has cash flow, and I want to refinance, but I don't want to refinance to my name. I want to refinance within the business and get a business mortgage where I might get, I may have to go shorter terms. Normally, if you're doing like a conventional refinance, you can go 30 years on a conventional loan and get amortized over 30 years. On business mortgages, normally it's 20, 25 years. You're still able to amortize over 30 years, but your rate adjusts every 5 years. So I may or may not go that route. I may end up just doing what I did with my single family home, refinancing the property into my name and then quick deeding it back into my LLC, where I'm still keeping that property separate from me. I'm quick deeding it back into the LLC. So on title, they are showing that they're the owner. I'm still responsible there as the property. I'm still personally responsible for it, but the business is on the title for it. They're paying the mortgage, and it's a business write-off there as far as the interest and such. So that is basically it, and all I wanted to cover in today's video. What you should expect from your property manager team, your property management. So if you guys did enjoy the video, again, hit the thumbs up button below. If you are brand new to the channel, hit that subscribe button. I really like getting into this whole business because it's a brand new thing for me. I really like doing stock market, but now that I kind of read up on rental and real estate investing, I want to really go this route. Again, I wanted to buy 2 more rentals here in 2019. So I'm going to be refinancing my duplex. I already paid off my HELOC, so I refinanced my first property. I had $80,000 drawn out of my HELOC. I paid that off with the refinance that I did from the single family. I now have an $80,000 credit line for my HELOC. I can go out there to refinance my duplex and pull, $80,000, $90,000 out of that. Now I have $170,000 to go play and buy more properties, fix them up, and then refinance those until I hit my limit of debt income ratio. But I think I can get another, 2 buys this year. And those could be single family homes. Those could be multifamily homes. So that is it for today's video. Hopefully you guys did enjoy it. Thank you all for tuning in. I will see you next time. And of course, hit the subscribe button, hit the thumbs up, and see you later. Bye.